Thank you everyone for joining us tonight. I am your mayor, Miss Lisa Hendrickson. And before we get started, I do want to introduce the commission that's here with us tonight. We have from District 2, CJ Hoyt in the back there. From District 3, we have Miss Erin Schuse. From District 4, our Vice Mayor, Mr. Joe Licata. And your District 1 representative is, we just had to change somebody. Thank you. Tom Capper. If I saw his face, his name would pop out. Thank you all so much for packing the room tonight. And for those of you at home, the first thing I want to do is give a disclaimer that our clerk said I had to give tonight. So the information that you're going to hear this evening is as good as 2024. Just with everything in life, things get updated and they change. So we are recording tonight. It is our 2024 annual presentation. And just know that if you reference it into the future, just make sure nothing has changed based on the information provided tonight. We're recording. Jolie's going to put it on our website so you can reference if there's anything important that you want to go back and learn about. And tonight, our host, our facilitator is Miss Kim Haar. She will keep us on our agenda. We hope to wrap up no longer than an hour and a half. We're going to try to keep it to an hour the best we can, but your questions are welcome. So please feel free to be interactive with your panel of professionals here tonight. Kim is the president of Haar & Associates Insurance. She is also a resident of the town of Redington Shores. She is also a volunteer for Pinellas County's program for public information. We call that PPI. And the town of Redington Shores is also part of that committee. And so tonight we bring you Miss Kim Haar to facilitate our event. Thank you, Kim.
Thank you very much. Okay, can everybody hear me okay? I usually don't have a very difficult time projecting, so hopefully I'm not kind of blowing you out of the water tonight. So thank you all for coming. It is so exciting to see a full room. And we appreciate you taking the time to come out tonight to our workshop. I'm excited. We've got some really good information for you tonight. It's going to be a little different than our normal forum in terms of who's here and what we're talking about. It's been a busy year. We were talking about change. Well, there's only one thing in life that's consistent, and that is change. But tonight we're going to talk about some flood insurance, some flood mitigation, some building updates. So what I'm going to do real quick is just introduce our panel so that you know who you're going to be speaking and hearing from tonight. To my left is Mr. Jeffrey Parker. He is from FEMA. He is going to be talking to us about some hazard and mitigation strategies with regards to flood. We also have Mr. Mark Vasquez, our building department official, that's going to be talking about some updates. Y'all recognize Lisa Foster at the end of the table, who's just going to kind of be, she's our floodplain administrator in Pinellas, but she's here as a resident. Nothing here as floodplain resident? Okay, that's great.
I'm not a resident. Well, I am. I'm here as floodplain person.
Okay, you're the floodplain person tonight. So we are going, as we go through the speakers, you are going to have an opportunity to ask questions along the way. We are still going to try to keep this to about an hour and a half tonight. So if I kind of end up moving us along, please also understand at the end of the meeting, you know, we all usually hang out for a few minutes to also talk about some specific questions that just pertain to you. So we all welcome that. The whole purpose of this meeting is for information and getting information out to the community and trying to make us all better when it comes to being prepared and knowing what to do before, during, and after a storm. So with that, I'm actually going to just go ahead and turn it over to Jeffrey Parker and let him get started.
Thank you, Kimberly. How's the volume level for everybody? Is that good? Great. My name is Jeffrey Parker. I'm a FEMA employee and my specialty is floods. I'm a subject matter expert about the National Flood Insurance Program. And we are a partner with the community, partnering with floodplain management. That's the program. More than just insurance, it's a program about floodplain management. And communities manage the floodplain, the product available for people that can be affected by flood, no matter where they're at in the floodplain parameters, is flood insurance. The National Flood Insurance Program is a product of FEMA. The flood insurance policy, it's a product. It's something that can be purchased to protect against the risk of flood. Now, flooding's happened frequently, often, recently. These are words that can describe basically 98% of the United States. I wasn't just talking about Pinellas County. I wasn't talking necessarily about Florida. It's a problem of the United States. It's the number one natural peril affecting homes, businesses, and renters. It affects more people than all the other perils combined. But when you think about the products that we buy, flood insurance is not always the one that comes to mind. We buy homeowners insurance, we buy health insurance, we buy automobile insurance. But flood insurance is not the one that is primarily brought to everybody's attention, but it really should be. Is that our fault at FEMA that maybe we have not raised the level of awareness of flood risk to the point that we should? I think that there is an idea of beware flood. I'd say be aware. There's flood. It's a reality of our lives. It's a reality if you live in Florida. The governor and the emergency manager of the state of Florida, Governor Ron DeSantis, and emergency director Kevin Guthrie, they've all said in recent events that if you have mail that comes to a Florida address, if you have a Florida driver's license, most likely you should be talking to your insurance agent about some level of flood protection. It's no different than having some level of automobile insurance. The state requires everybody have a minimum of liability. Maybe that's something that we consider. For the fact that in the recent storm, Hurricane Idalia, which missed you folks, but got you folks. And what I mean by it missed you folks, you did not experience the 7 to 12 foot storm surge above land. I mean, think about the 7 to 12 foot storm surge above land. And we're in a building currently right now that's got some pretty nice elevation above sea level. But Redington Shores is a very, very low point of ground that only is being protected by what has been built up. And so we do have somewhat of an older home stock. And here I go saying we. I forgot to tell you a little bit about me and my past with this area. I was a resident of Pinellas County, lived in Clearwater a good long time. I was an insurance claim adjuster licensed in the state of Florida. I handled more flood insurance claims than I did homeowner claims. Homeowner companies have done a great job at convincing you need to have that, and I don't want you to believe that you need to be without it. But when they have sold that product, they sold it on the premise initially of fire. It used to be known as a fire policy, a DP policy, a dwelling protection policy, because fire is devastating, and it is. Flood, I would say anybody that's gone through a fire and gone through a flood, they would prefer the fire over the flood. It's crazy to say you would choose one disaster over another, but after you've gone through the flood and you realize what it's like to go through it, well, you'd also realize that having flood insurance was a good idea to get you through that, get you to the other side. An insurance agent is a very important trusted partner, and I think we've failed FEMA's job at informing and helping everybody be aware of the problem. And that's what these programs in part help with, and also help, believe it or not, keep your flood insurance premiums lower. This meeting itself allows for the community to track what it's doing to make people aware of flood, as well as other things to prevent flood, reduce the risk of surface runoff due to heavy rains and other things. There's all kinds of things that go into floodplain management. But one of the things that the community's doing, the county's doing, is they're taking extra steps to reduce the risk of flood. And sometimes in the building department, when you're building or repairing, they want you to do things in a way that reduce the chance that you're going to get that likelihood of flood. Not remove it immediately, completely, but reduce the likelihood or lower the impact and the cost of that so that the community bounces back. When it doesn't have the ability to bounce back, I've seen communities that post-disaster, they languish for a long time, they hang on, and then they go into decline. I don't think this area is ever going to suffer that problem because it's so loved and people will never give up on the beauty of this area. But part of protecting the life you built, the home that you have, is having flood insurance. Now, what is a flood? Well, we all know that when waters are coming in from the Gulf or out of the bay, and it's coming across the land, that's a flood. Floods are also thought of as when governors fly over and they're in a helicopter looking at a vast expanse of rooftops surrounded by water. But most floods start out very small. How small? Well, by our definition, it begins as soon as there are two adjacent properties, normally dry land, inundated by water from any source, affecting two adjacent properties. One of the properties can be a street or a boulevard. The moment a street and a boulevard and an intersection is temporarily submerged from water from any source, high tide, heavy rain, tidal surge, a broken water main, and it affects a property that has one of our flood insurance policies on it, whether it be a renter's policy for the contents, a landlord policy for structure that somebody is going to let somebody else live in and move their stuff in, a business, a condominium unit, a condominium building. If that water affects that, and it's only affected those two adjacent properties plus that building, it's a covered loss. One structure, one life, one apartment building. That flood begins at that small level. It doesn't rise to, it has to be this huge, vast event. Now, there are occasions that if you're a huge landowner and you happen to have 10 or 20 or 100 acres, normally dry land, in your house or your structure that you insure with us suddenly becomes absorbed within a 2-acre pond that grew, that's the conditions for flood within one property, confined to one piece of land. It has to be 2 acres, but we don't have these 2-acre situations here. We have, and I'm not offending anybody, I hope, but we have smaller lots. They're just smaller sizes. They're not acreages. And so you can so easily become affected by that two adjacent rule. It was a heavy rain. It just kept raining, and it was at high tide or king tide. And so we have a flood. But if you have a policy, you have a path to recovery. Pick up the phone, call our claims department, report your loss. When we have these large events, one of the benefits of that policy is the moment you call your adjuster, they are attuned to the fact that we want our policyholders to get money now, not down the road after everything's figured out. There will be payments down the road when things are figured out, after the structure is inspected, after it's documented, photographed, measured, calculated, determined the materials, the value of the materials. This is all the process of a flood claim. But when you call up and you need something right now, how's $5,000 sound immediately being sent out? That's our lowest level of threshold of money going out the door. If you've got good photographs, you may have already incurred expenses. You've got invoices you can send us for things you've already done by the time the adjuster gets to you on the phone. Our advances can be as large as $20,000 before the adjuster has ever even arrived. Now, we have to have some idea over the phone that there's going to be that much damage at least. We try not to go over a 50% threshold when we're advancing monies out before all the ducks are lined up and the adjustment process figures out what that flood insurance policy will issue. And again, that's how the product performs. By and large, from what we hear and what we heard after Hurricane Idalia, and it's still, we're getting news from Hurricane Ian, is when it came to the comparison of the process of going through the claim that needed to be filed after the event, wind and flood, people said the flood process was relatively easy, relatively painless, as long as it was well documented, which is the part that everybody can do on their own. And I know Lisa spoke to it, and it's an excellent point. People have ways and means of taking photos, lots and lots of photos. Take photos as it's occurring to prove the event, that the outside was temporarily inundated by water. That way, when the flood goes away, and sometimes that telltale bathtub ring isn't there to be seen, it may make it a little bit murky in the claim. But if you've got the photos, you've got the evidence, there it is. As you're doing your cleanup process, as you're moving things out, tearing things out, photograph that stuff. Don't let that get away. Document your loss so that you can be an advocate along with your flood insurance claim adjuster to get you every dollar that we owe you. We owe you for the coverages that you bought. Now let's talk to coverages. You can buy either building coverage or you can buy contents only. That way, in the event that there is just a renter living in a structure that they have no interest in, they don't need to be buying for what they cannot be paid for. We can't pay a renter for the structure unless by lease or agreement that there is some caveat in there that they are responsible for certain parts of that building or that they can insure certain improvements that they made. So there are ways to protect things, whether you're a homeowner. Homeowners would generally want to have both building coverage and contents coverage and select a deductible for both coverages because they are two separate coverages packaged under one policy. Condominium association can purchase a flood policy for that entire structure. How much can they insure that structure for? A maximum of $250,000 per unit times the number of units in that structure. That's what we're willing to sell. So there could be condominium associations out there with millions of dollars of protection. Why do I say that why would somebody in every one of the units, and you know how our condominiums are stacked here, they rise up. Why would somebody on the 10th floor want to have flood insurance? Well, if every one of those units insured, that's the total value of what can be claimed if there is flood damage to that. I go back to Hurricane Ivan up in the Panhandle. And up in the Panhandle after Hurricane Ivan, it decimated the first and the second floors of all of the condominiums. But the tidal surge came in with such force in the inflow and the outflow that it scoured and tore away land. And these condominiums buckled down at the lower levels. And without coming crumbling down, the third floor, the fourth, the fifth, sixth, seventh, eighth, and all the units and above were rendered uninhabitable forever because the structure had to be torn down. My guess is there's a lot of condominiums insured out here by the associations, and they're not insured to value. And that's going to be a big problem because if you're a condominium unit owner, uninsured amounts wind up becoming loss assessments. And in some loss assessments after Hurricane Ian, where places didn't carry enough insurance either on the wind or on the flood side, there were assessments going out for $15,000, $20,000, and $30,000 per unit owner. So when it comes to condominiums, if you live in one, make sure that your association board members are aware of this fact and also aware of the fact that when it comes to a policy performing, when you don't buy coverage as you should, policies perform differently. Like an auto policy where it's not full coverage, it's liability. The outcome's going to be different when you file a claim. So with a condominium association, not a house flood policy, not the condo unit owner policy, but the association policy, if they underinsure, I guess the harshest way to say it is we underpay when it comes time for that policy to perform. We say if you should have carried 50% more insurance to be insured to value according to the worth of that structure, then we're going to calculate what your loss is. And if the loss was $1 million, we're going to short that by 50%. Then we're going to apply the deductible. And a lot of times on the condominium association policies, those deductibles are $10,000, $25,000, $50,000. So $1 million damage could wind up being something like a $450,000 settlement. It's a pretty big assessment to all the unit owners in there if they're not aware that that structure is not insured to value. Homeowners policies, we can insure up from a 1-family to a 4-family home for up to $250,000. And when it comes to the personal property contents coverage, we can insure up to $100,000. When we have businesses, well, we've got 2 different classifications of businesses under our flood policy for businesses. And it determines whether it's more like a warehouse structure or more like a non-residential structure as to what amounts can be insured. But your insurance agent can get into the details and specifics of all of that. Then I go back to, again, what level of insurance should I have? And I think anybody in Redington Shores should have some insurance. Talk to their agent about some amount of insurance. But if you've got a 2 or 3-story structure, evaluate yourself, your level of risk, and whether you feel like your 2nd story or 3rd story is going to take a whack. Now, if it was undermined and it could be compromised and the whole structure has to be torn down, I guess the proper amount to insure it for is the maximum you can get, but that you can afford and maintain each and every year. I don't know what doesn't eventually go up in price over time. So I had some heyday times in my adjusting, and I wound up one time with a nice car with an $1,100 a month payment. And I really thought life was going to continue and that would never be a problem. Well, at one point it became a problem, and bye-bye luxury car. So when you're purchasing insurance, purchase an amount that you know you're going to keep with. If you're selling a property and you have a flood policy, please, you probably have discounts and you might think that that policy is expensive. But if you're still benefiting from the discounts that our program still has in place, some of our policies are still subsidized. Those are the policies that have been in place for a long time, and people have kept those policies year after year. Well, they are going up, but they are capped at a statutory rate of 18% before fees and surcharges. We do have other fees associated with the cost per thousand. And those fees are regulated by Congress in passing acts back in 2012, the Bigger Waters Flood Insurance Act, and then the 2014 Homeowners Flood Insurance Affordability Act. The Affordability Act is what kept those subsidies in place, because the 2012 Act took them away. And I'm pretty certain that there were a lot of senators and congressmen very surprised about their waterfront properties that suddenly ballooned in the price of their premium. And so they said, FEMA, NFIP, put those subsidies back in place. But they mandated that we slowly over time get rid of them. So if you have a policy, transfer that to the next buyer. For one, your home sells quicker, it's more valuable on the market. 2, the buyer has less money to come up with at the time of closing. And 3, it's benefiting from that slower progression of an increase in price. People coming to us for the first time, I'm afraid if you're in the high-risk flood zone, the special flood hazard area, if on the flood map it says zone A, AE, A with a number, or maybe even more hazardly, the letter V in front of it for velocity, that means the current is really coming at particular areas of land based on however they measure land, underwater areas, and currents, and I don't really have a projection to figure out. Some areas are really going to get whacked with a very strong current. So all of these categories on a flood map have some indicator of the level of risk. And when I think about level of risk, Jolie, would you like to bring up the national risk indicator? It's a FEMA site. Got a map. You can look at any place in the US and kind of find out what perils they have in the hazard index. Ice flows and ice dams and icebergs, well, no. It's not part of the peril index for here, but the peril index here is, it's going to be wind, flood, hurricane, heavy rainfall. I'm certain that they've got some basis for high tides, things of that nature, because now with the current data, it's more predictable in a sense of maybe where, how high, when, but it's definitely a uncertain science, because I don't know how many times since Hurricane Charlie, Francis, Ivan, Gene, and that was 2004.
Maybe Ivan wasn't 04.
Yeah, Michael,
There've been so many. I've been adjusting flood losses since Hurricane Andrew in 1992. I was a very busy person before I ever came to FEMA. I had a 25-year self-employed career where insurance companies were so busy, they always needed somebody to go out there and adjust losses. And out of all the perils that anybody could pick up a phone and say, hey, I got insurance, is this covered? Flood happened more than everything else. And sadly, that's how I became an expert on the National Flood Insurance Program, its policy, its benefits. I could go on and on. I've walked through the stink, yuck, up, muck, everything that a flood is. And I've watched what it does to a person's life. And because we have such a low penetration rate of insureds, let's say maybe 33, 34, 36% of the properties out here have flood insurance. That's it. No, I'm being serious. That's it. And if we've got millions that we've paid over the history here, and we have trillions at risk that are currently protected, but we're only insuring a drop in the bucket. And when I'm talking about buckets, that's not what you want when it comes to money. You don't want buckets of money. You want 55-gallon barrels full of $100 bills. And I'm telling you, that's what the flood insurance policy is like. Let me give you a different scenario of no flood insurance. Well, what's the journey going to be like? You just flat out on your own. 70% of the businesses that have a flood and don't have flood insurance will not reopen their doors. They're gone. That has an effect on the community. This is all about preparedness, mitigation, and mitigation is being prepared. One of the things is having insurance. You mitigated all your lives by having car insurance, homeowners insurance, medical insurance. You're mitigating against that higher cost when they whack you with the bill. It's going to happen, but you can transfer that higher bill to an insurance company through risk transference. Just new words for describing buying an insurance policy. It's risk transference. For this amount of money this year, it's on you guys when we call it for this problem. And the problem of flood is our specialty. And what I want to do is help protect you. But there are, risk index. Here we go. This risk index coloring is to show you the vulnerability of this community because of a low preparedness for the highest risk peril, which is flood. I mean, it's bad. It's a very low preparedness, but we can prepare. That's what you're here doing tonight. You're preparing by knowing that there's something out there that you can do to be protected against this when it happens. And the question of when is sometime in the future. How high will it be? I don't know. But 1 inch in a 2,500 square foot, one-story home is going to be roughly $25,000 for 1 inch in and out. I'm not saying hanging around for a day of flooding. It's one of those in and out rainstorms where you got to it with a squeegee right away. You're tearing stuff out. $25,000 for an hour's worth of mayhem. And when I talk about mayhem, hey, everybody knows about these spokespeople for these insurance companies. Which insurance company has the spokesperson named Mayhem? Thank you. Who's the wide-eyed? She's got big bright eyes and she's got a big name tag and she wears white clothing. Which insurance company? Okay, I'm connecting here. So you know that there's perils out there and people are advertising all the time trying to get your business and they want to keep your business. We don't have one. I forgot to put my duck up on the table. We do. We actually have a little yellow rubber ducky. It's known as FLIP, Flood Insurance Protection. You don't know about it because we don't talk about it. You don't know how at risk you are because we don't talk about it, but we are tonight. And now we have an idea that call an insurance agent and talk to them about some level of flood protection, even if it's a liability level. Liability level. How's our policy perform like a car insurance when you only buy a liability level of flood insurance? Oh, okay. You're not insured to value, so we do not calculate your homeowner's flood or your home flood insurance policy claim for replacement cost. We're going to subtract some depreciation for age, use, wear, which tend to be bigger numbers, or tear. As a flood insurance adjuster, I know plenty of times that I tabulated what their replacement cost value, but they bought a liability level, so they weren't entitled to one of those benefits that our policies insured to full value replacement cost, or no less than 80% of that replacement cost. Those policies get that benefit of no depreciation, except for some things that wear out really fast: carpet and kitchen appliances. Some other oddball things, awnings, antennas. When was the last time you saw some antennas on a home? An aerial, okay? So we still have some words in our policy that, haven't been updated, so we still hold on to some things. But you can buy policies that are of a lower level, not insured to value. The agent services you by getting you the product that you need and you can afford. Their commission will be what it is. I don't want to take away from their commission. Obviously, if there's a higher level of protection, a higher level of insurance, a higher cost, commissions are correlating to that. But agents work for you to get you the protection you need and the answers you need to the concerns you have. And if price is concerned, ask them about a price and give them some ballpark maybe of what's affordable, and then they can package that building coverage, the contents coverage, and give you deductible options so that they can tailor make a policy for you that if you feel your first floor is all that's at risk and you need 60 or 70 or 80 to fix Humpty Dumpty down there, then buy what you can afford and buy based on your level of risk. If you feel that your risk could affect your second or your third floor, you can, I'd say, burden the expense of that annual premium without losing that coverage or dropping it 1 year and then find out that's the year you needed it. Or dropping it after your mortgage company tells you, hey, no mortgage, no requirement for flood. Yippee, yippee. I'm not going to pay that policy. I know lots of agents that I've talked to all the way up and down the coast from Burke and Adalia have said, we try to not get them to cancel it after their mortgage. We know that, probably just when you really need it, that's when it's going to happen. And they had lots of customers that like, can I get that back? No. You let it lapse, it's gone for more than 30 days, it's gone. If you forgot to get your payment in and you still got 30 days, get your payment in, it won't lapse. And if your subsidies are still in place, you keep that subsidized policy, and so its progression in price will be slower. Questions? I've gone on for a really long time. We have other speakers here, but I'm certain there has to be questions about that policy. Does anybody have a claim? How is it performing for them? Has anybody had a claim? Does anybody in this room have a flood policy? Excellent, excellent. Thank you. First of all, thank you for being a customer. I'm still holding up my hand. I don't have a mirror. I'm a customer on a mobile home down in North Fort Myers that was damaged by Hurricane Ian, and I am ecstatic that yesterday we finally got our roof. And again, on this mobile home, it's not the newest of the new, but it's my little Florida kingdom. I've got my little Ohio kingdom, and I got my little Florida kingdom. I'm no longer a resident of Pinellas County. I moved away in 2012. But again, I understand disaster. I understand what people go through. I understand the rebuilding process. I understand the value of insurance. For one, I've helped people get millions and millions and millions and millions and millions of dollars out of their insurance company, whether it be a homeowner, business policy, or a flood policy. But they're valuable. They're worthwhile. When you need it, it's great. If you drive away from home and suddenly you look up and you're like, that is the most ominous purplish sky I have ever seen. If you got a flood policy, you got the protection. I know you don't want to be flooded, but you've got the protection. I know that if you get in your car and you drive down the road, that's not the day you're going to say, I'm going to drive like a wild person and I'm going to use that insurance. I'm going to file a claim. But you buy it because you don't want to use it. You buy it because you don't want that burden on you. And you buy it because you know those burdens are extremely expensive. And our policies are affordable. I have looked at our policies in force, and I've taken a look at the different policies on different streets. And the ones that are low on the ground, sad reality probably is you're going to be spending somewhere around $4,000 or $5,000. But do you have $250,000 or $100,000 easily at risk if we have a storm? Yes. Now, some of the homes that are built up higher have been elevated, or some of the brand new homes that are really built up there. I'm seeing annual premiums for lots and lots of insurance, anywhere from $400 to $1,100. I'm seeing others that are in the middle range of $2,500. Now, all of these are usually based on they bought $250,000 for the building and $100,000 for the contents, and they probably have a $1,500 deductible for the building and a $1,500 deductible for the contents. That's typically what I see. When I see something odd, when I see a really low premium, I dive in and take a look. And then I usually see that, oh, that's the house that's like flat right on the ground. It doesn't even have 2 steps going up to the front door. I mean, it is right on the ground. And it has some modicum level of flood insurance, which is usually about $90,000. And $89,000 has been our average flood loss settlement by and large, when you take a look at the big and the small and the fancy and the less fancy. An average flood settlement recently has been $89,000. Now, how about there's a big bad problem and FEMA's in town and you can register for some help and get some level of help. Okay, now we're going back to the buckets of money, not 55-gallon barrels. Now we're going back to $50 bills, not hundreds. The average recipient of FEMA disaster assistance, when you register to say, I need help, I either had very little insurance or none at all. And I've had a problem. Sometimes it's a tornado, sometimes it's a wildfire, sometimes it's a flood. Most times it's a flood. The average recipient, $5,900. Average flood claim settlement, $89,000. If you're a homeowner, single family, and you bought the maximum potential settlement, $350,000. If your loss happened to be $400,000 and you've got that $250,000 on the home and the $100,000, we're going to subtract our deductible from the bigger number that's even bigger than our coverage. So that actually, if you had the most severe loss and you had the most coverage, your settlement would be for the full amount of your policy, which could be for a homeowner, $350,000, because we take our deductibles from the loss. If your loss was $70 trillion, we subtract your deductible from $70 trillion. I mean, I'm giving unrealistic numbers so that you can realize that your policy is valuable, there's benefit to it. Flood loss avoidance, I forgot that. How many times have you been warned? Imminent danger of flood. Would you like to do something? Well, one of the things is, would you like to evacuate or you have to evacuate? So what's going to happen to your stuff at home? Well, if you've been given sufficient warning and you take some action to protect your home, could be an elaborate system of sandbags, plastic sheeting, pumps, plywood, all kinds of things that people devise to protect their structure. We will reimburse you up to $1,000 with no deductible for those actions. What if that flood didn't happen? Thank you for listening to the warnings that it could. And you took some action trying to prevent us from having a flood insurance payment that's bigger than it might be, or it might not be a claim at all because you did enough to protect your home and it didn't flood. Reimburse you up to $1,000, no deductible. How about my contents? Are they really valuable? You want to get them out of Dodge? Get a rental van, rent a place. They're protected by our flood policy for up to 30 days at another location because there was imminent danger of flood and you took action to get your stuff out of the way because you didn't want to lose it. You don't want to have to repair it. You don't want to have to clean it. You don't want to have to say goodbye to this forever if it meant something to the family. And we'll reimburse on a contents movement protection up to $1,000, no deductible. That's not both. It's $1,000 under that policy because those are 2 coverages under the one policy. So I don't want to inflate this to believing that there's 2 different pockets of $1,000. There's one.
So if you buy a mitigation type product and you just have it on hand in case a flood comes, and the flood comes and you've used that product, are you saying that you can get reimbursement for what you spent on that product in advance?
The protection against flood?
Mhm.
Yes, when it meets the definition of loss avoidance, that is a sub-coverage of our flood insurance policy. And we actually have a brochure that you can see online And it'll explain that coverage better than it's explained in the actual flood insurance policy if you go to that section of coverages.
I think there's a timeline associated with that, no? Like, we can't buy it today for a storm that might happen in 3 years. There has to be an
If you
imminent
have a
flood,
flood policy, that's always part of our coverage.
but you have to have a imminent flood first before you buy it?
No, 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 no.
Okay,
If you have a flood policy in place,
okay.
we've got warnings, hurricane's on its way. We've got warnings that we've got high tide, king tide, imminent danger of flood. You're right there on the water. You take some action to protect against being affected by that imminent warning. You can be reimbursed up to $1,000 if the event happens or if it doesn't happen, but you heeded the public warning. That's the avoiding the loss, and that coverage is part of our policy always. It's always been a part of our policy, just seldom claimed. After events, I would go around and look at all the sandbags and all the things, and I would go to the insurance agents and I would talk about our policy and say, hey, are you getting claims for loss avoidance? And they go, what are you talking about? So agents that sometimes sell our product didn't know we had that product, but it's just part of it. It's just part of it. It can be claimed if it's known. And if it's not known, you don't know one of the benefits of having that policy.
If you pull the trigger on one of those things and request that for, does that impact your next rate increase on your insurance?
Well, I'd say that with insurance, and I have to be quite honest, every claim that an insurance company has presented to them, they evaluate. Now, do we kick people to the curb in our program? I wouldn't use that terminology. I would say that through flood mitigation and through the community, if you're experiencing a flood problem repetitively, something should be done. And sometimes that's why some people, and it's a harsh decision, they either buy a home that's elevated or they try to elevate their home through different means. And one of our sub coverages is increased cost of compliance. And if you've had a flood and your building official says your home is not built to the current compliance levels and it's suffered a certain degree of damage according to what the community's ordinance is, and their ordinance has to meet our minimum. It can be more stringent, more protective of you, but our threshold, the FEMA floodplain management threshold, the guidelines that the building officials, floodplain administrators, floodplain managers, when they're telling you about rebuilding your home after a flood, if 50% of that repair cost from all perils has been met, and when I say 50% of what number? The appraised value of that structure by whatever authority appraises that structure or through whatever appraisal you provide. If your repair expense is 50%, exactly 50% or 1 penny higher, your home may need to come into compliance. You check with your building officials, you go through the permitting process, and if through some degree of determination that your home doesn't meet the minimum compliance standards, it may be declared substantially damaged, or you may be making substantial improvements to where now when you do that, they want you to be less likely to be affected by flood because of the level of your home relative to height above sea level. Increased cost of compliance in our policy is $30,000, and it responds to that designation by the community and helps with the expense of whatever that property owner has to do. But currently Congress has a cap at $30,000, which is not as much money as the program would like it to be. It needs to be higher, it should be higher.
And on the loss avoidance, for example, a lot of people on our street now, after what happened last year, are looking at flood barriers, companies to come in and buy flood barriers for their houses. So as far as the timing on that, I'm not clear on what the two of you were saying. It's like if they buy them now,
Okay.
will the loss avoidance only kick in when there's a flood? Is that how it works?
The loss avoidance are the actual actions taken at that time. So
Ooh, careful.
the answer would be
Okay.
no, buying it now for later. But what
Okay, come
I
on.
You
understood
can't buy
is
it.
there,
When the flood's coming, you can't buy it. There isn't, you can't get it.
what I'm saying though, and I'll give you an example of where I had confirmation we would help burden some cost up to $1,000 with no deductible. Swimming pools that these are bladders that you fill with water. They actually make bladders that are tubes that can go around your home, creating a dry moat. About $35,000. They're expensive. Now, the cost to set that up, operate the pumps to keep the rainwater or any water splashing over that moat, there's some operational cost, setup cost. So if somebody had that and was setting up this system, we would contribute up to $1,000 for the operational cost setup of that event and that setup. But
Right.
we won't keep repaying any, cost
You
towards.
sure you don't have to wear your socks?
Event annually or anything like that.
Are you
It's
sure
really
you don't have to wear your socks?
setting it up and doing that active act of protection.
Okay, I'll bring them just in case.
My thoughts on that, on.
Let's put your
having
coat on.
Flood barriers, the gates that are
Here,
not manually operated.
Come on, put your coat on.
Automatically activated. I'd say that'd be more like a credit for a commercial property in floodproofing a building.
You could call it floodproofing, you have to have an O&M plan now, the building official can speak to that, and then as far as mitigation credit, your insurance person can speak to that.
Yes, so we have partners here in some of this.
We have some questions on the Zoom.
I wanted to ask a question. I don't know if somebody else is talking, but this is Joe Easton. Somebody has a child or something, they're telling them to put their socks on and all this. Could they please mute themselves? It's very distracting and I'm trying to learn from you guys. Thank you.
Is that better?
Yes, thank you very much.
All right, well, thank you very much. And I think with that, that's probably a good segue to turn the speaker over to our building department for an update. So, Mark, floor is yours.
Wow, I kind of want to buy some flood insurance, even though I don't live in the flood zone. So what we've, when we have a flood, what we usually deal with in the building department aspect is the aftermath. And how do I go about, what do I need to do? What permits, if any, do I need to take out? How much of the damaged materials can I take out? And that's where, when and where people get into precarious, a precarious situation with either trespassing into the substantial improvement or substantial damage 50% rule. Our community is 49%, so you're 1% less than that. You're allowed to take the damaged material from the flood out without a permit. Just get it out, because what you're doing is stopping further damage or water from seeping in, causing it more damage than that. But what has happened is some citizens, they'll go above and beyond and they'll start replacing it, and they'll start ripping out electrical work that wasn't affected, but all of that work type of work will count against the 50% rule and jeopardize the home from either having to come into full compliance, either being elevated or demoed and built to new. There was a topic that you mentioned about condominiums. For the HOA, it would be prudent for them to, there's statutes now that require milestone inspections, and that's to circumvent catastrophic damage to the existing building and whatever it may have caused. But in the event of surge and erosion and scour, that's a real possibility when we're so close to the shoreline and the water, and most of buildings are on sand. So I would encourage, if there are any associations, to reach out. That is primarily done private, started by a private engineer or architect that can come out and do the analysis, and then they get in contact with us, and then we'll start to work together as to ascertain what type of mitigation you can go through. That's basically it. If you have any questions. Sir.
So if we get hit with a flood and there's, hundreds or thousands of people that need to start repairing their property and doing all that stuff, how is the town prepared to, certainly your department isn't prepared to handle all those cases, to progress through the permitting process and everything else. So do you then contract with other municipalities for inspectors and all that kind of stuff? How does it move along? I would think it would be a gridlock for months and months and months.
Well, it is, but if everybody came in at once, it would be impossible to service everybody. But that isn't usually the case, because the damages and the claims or the permit applications come in waves. So it has been manageable. I've yet to work in a jurisdiction where we haven't been able to service the community efficiently and effectively.
Any other questions for Mark? All right. So next up is Lisa Foster, our Pinellas County Floodplain Administrator. Lisa?
Thank you, Kim. Thank you all for coming out tonight. And I know the pizza helps, keep everybody awake and alert and not making your stomachs growl, make you wait for the pizza till the end. So I'm really excited that all of you are here. This is part of the countywide program for public information. That is an activity under the Community Rating System program, which is sort of the rewards program for the National Flood Insurance Program. So in short, the town does stuff like this. They get credits which equate to flood insurance discounts for all of you. And one thing that I wanted to follow up on was make sure you transfer those policies over. I would expect that many of us here in town have one of the subsidized policies. Basically, the old rating system that FEMA had, I'll call it 1.0, had discounts on it, and it was related to base flood elevation and your finished floor elevation basically a couple more things, but it was a very simple calculation. It wasn't very accurate. It came into play in the 70s and it needed to be updated. So they updated it to an actuary system. It's a far more complex system, and rates are higher if the risk is higher. So a lot of the country saw decreases in rates. A lot of the country, Florida specifically, saw very high increases in rates when that risk rating 2.0 went into effect in 2021. So what happened is everybody that had the old policy, they had an opportunity to roll onto what they call the glide path. And the glide path is what Jeff was talking about. You're not going to have more than an 18% increase every single year. That's before they add the fees and things like that to it. So that 18% increase will eventually get you to your actuary rate. Now the CRS discount is going to be applied to the actuary rate because you rolled on that glide path with your discount. So if a community were to go backwards in that program, say they were getting a 20% discount and it drops to a 10% discount, everybody on the glide path is going to see that 10% increase on their next renewal. So it's very important that the town does not go backwards on their program. If the town goes forward on their program and gets a bigger discount, everybody that's on that glide path is going to get to their actuary rate sooner because their actuary rate is going to be lower. It's going to have a fatter discount on it. Now, if you are not on the glide path, you just have an actuary policy, a regular policy, because you didn't come in on the glide path. Maybe you bought a house that wasn't insured, whatever the case might be. You're getting that discount just right off of that premium, right off your actuary rate right away. So there's a couple things with the discount, but this program right here that you are all participating in is helping with that flood insurance discount. So really thank you all for being here and listening.
20%, right? Redington Shores, CRS class 25.
6 going to a 5, I believe.
6105. Congratulations. That gets everybody that buys flood insurance. Once they go from a 6 to a 5, that's another 5% that when they calculate how much your cost per thousand is, how many thousands eventually, reduced by 5%. And then the Homeowner Flood Insurance Affordability Act fee, federal policy fee, and then the increased cost of compliance fee gets added on to that discounted price.
Yep.
Pinellas County has done some incredible things in floodplain management, trying to reduce and minimize the problem of flooding. And moving from a
3, 2, 2.
a two. When you take a look at the community status book of participating communities in the flood insurance program, and there's a little over 22,000 communities that you can buy a flood policy because they manage their floodplain. Community doesn't manage their floodplain, and they build unwisely in risky areas. They're not participating in the flood program. And some communities in the United States, nobody can buy a national flood insurance program policy to protect against flood because their community has decided not to manage the floodplain and minimize the effects of the flooding peril to their citizens. The communities around here do a fabulous job at making sure that our premiums are not as costly as some parts of the country on an equal peril basis, on an equal cost per thousand basis. Kind of, that's underwriting and pricing, and it's a big weird bubble to try to get your head around. It's not even a bubble; it moves like an amoeba. So I try to just get you to understand that this community is doing active things, and this meeting gets credits to keep these discounts in play for everybody that buys a flood policy. So keep participating. I wonder what would ever happen in the way of, we have 100% participation. Every one of our structure has some level of flood insurance. It doesn't, and it probably hasn't happened anywhere in America. But if it did, I wonder what kind of attention that would garner and say, you know what, that resilient community that's doing so much to lower and minimize the cost of flooding on the overall society, taxpayer, because FEMA individual assistance and all these other benefits that people will garner out of the FEMA program when FEMA comes to town and there's grant money going here and there, we all pay for it, and so do I. Those are taxpayer dollars that go out. Thank goodness we are generous, sometimes too generous, I think, if we listen to our public clamor about where money's going and where it's not going, but I know that money should be going to flood. I'm sorry.
Thanks, Jeff. Okay, so that was the first thing. Thank you for being here. Second thing on my list is to reiterate the awareness of flood risk. And that was the first thing Jeff talked about. And it is something that I think everybody in this room has a general idea about. But the elevations, the ground elevations in this town range from, 3 to 8 feet, 3 to 9 feet. And there are areas that are very, very low. Finished floor elevations are very, very low. We had 3 floods in 3 years that hit 4.5 and greater in elevation, in flood elevation, compared to the ground elevation. So we had, a couple of feet deep water in a lot of these neighborhoods. So the flood risk here is real because we haven't even been hit by a storm. Those were just little baby storms going by, or Idalia, what was that, 150 miles offshore? I mean, that was way offshore. It was a large storm though. I mean, that one was pretty violent here still, as far away as it was. So the risk is real, and I would encourage you to go onto the map service. It's pinellascounty.gov. What is it? Floodmaps.pinellascounty.gov. Julie, you can probably pull it up. And there's a list of layers on the right-hand side. If you go to the thing that says county floodplains, there's a list of layers. You can turn on the digital elevation data. So this is the LiDAR data. They fly airplanes and they figure out what the ground elevations are. That data is up on that site. So you can look at the ground elevations, and then you can look at the flood elevations. You can do the math. A 100-year storm, which is your 1% annual chance storm event, that flood elevation's on there. We also have the 1% annual chance storm projected for 2070 on there, based on an intermediate sea level rise. So you can go on there and take those numbers. If it's, say, 15-foot flood elevation and it's a 5-foot ground elevation, that's 10 feet deep. So I encourage you to go play around on that map service. If you have any questions, I have cards. I'm happy to do a report for you for your own property. But make sure you know what that risk is. The second point was figure out how much flood insurance coverage you need. Okay, how much money do you need to get back on your feet from a baby storm, from a big storm? What if Ian came here? What if Ian didn't turn and Ian came here? What was your plan to recover? Do you have funds set aside? Do you have enough flood insurance coverage? Do you have wind coverage? Do you have what you need to get back up on your feet? Because ultimately, it's all our responsibility to recover. FEMA is there to help, but it's our responsibility to know what our risk is and get the coverage that we need to protect ourselves. So, look at the maps, figure out how much you need, work with your insurance agent. They'll give you all the different scenarios. High deductible for the oh no scenario. You can cover yourself if it's a small baby storm, whatever it might be. So you can talk to your agent and they'll work with you to figure out what level of coverage, what type of coverage you want. Do you want both contents and building or only one or the other? So work with your agent on that. 6 Ps. When I first moved to this town and they were putting together the program for public information for the town, a very wise man, a former vice mayor here, Vice Mayor Holmes, said, Lisa, the 6 Ps, you've got to know the 6 Ps. I'm like, Vice Mayor Holmes, what is the 6 Ps? He said, proper prior preparation prevents piss poor performance. And that has stuck with me ever since. So know your risk, get the coverage you need to be able to recover, and prepare. Now, some of you are talking about buying those really expensive flood barriers. Very reasonable to do that. Unfortunately, that $1,000 isn't going to be put towards them unless there's a declared storm, which, as we all know, you're not going to get them that fast. But to Jeff's point, the amount of time and energy it takes to put them in place, you can get reimbursed for that. So if you pay somebody to come and help you put it in and do all that stuff or buy any other pieces to it, that part would be covered under the $1,000. But please, 6 Ps. Know your risk, figure out what coverage you need, 6 Ps so you're ready. Now let's talk recovery. On the recovery side, now it's over. You want to get that water out, you want to get that wet stuff out quickly. And Kim can speak to this too as soon as I'm done yammering. So you want to get that wet stuff out quick. And the building department will do expedited permits. The last 3 storms, the building department has not charged permit fees. You just come in, they will very quickly issue you your demolition part permit, right? This is not your reconstruction plans or anything like that that needs a deeper review, but you've got to get that wet stuff out so it doesn't mold. So you're going to need to get your restoration company, or if you're doing it yourself or hiring a contractor, whatever it is, back to the 6 Ps. What are you going to do after it floods? Do you have a plan to get the wet stuff out? Are you going to do it yourself? Are you hiring help? Did you get on the list to get the help? So figure out what you're going to do in advance. Then call up the building department, we're getting the wet stuff out. They're going to be driving around and doing damage assessment. There's going to be a first sweep of damage assessment by the fire departments. Then there's going to be a second sweep of damage assessment where they're going to determine whether you are destroyed, major damage, minor damage, or affected. So they're going to classify all the houses as one of those 4 things. Then the building department is going to take that data and say, well, if you have major or destroyed, marked as the damage assessment, they're going to go out and do another inspection on the house to determine if it's substantially damaged. And those substantial damage determinations are in place to make sure that you're protected from future storms. And that's when that ICC can kick in. If you get your substantial damage letter, you're eligible for that up to an additional $30,000 towards mitigation, meaning elevate your house. That's the recovery. Let's see. Oh, milestone inspections, which Mark mentioned. The milestone inspections is a new legislation, and this came as a result from the Surfside collapse of those condos. So now all condo associations are going to be required to have these inspections done, engineering inspections, and it's to prevent the collapse of these buildings where they've been neglected, quite frankly. The Surfside building, I believe they had an inspection and they were supposed to fix something and didn't, but there was no oversight on it. And, I don't know who dropped the ball, if it was the association or what happened, but based on that event, now there's legislation that says we have to have these milestone inspections, and that's going to end up going through the building department. And it will cost condo associations money, and it probably will cause assessments to occur. Now that's going to help with the structure, but if that structure was built, say in the, 70s or 80s, and it was built to non-coastal construction standards, a wave is still going to impact it with the scour and erosion and affect it. So talk to your homeowner association or your condo association if you're in that boat to make sure they have proper coverage, because those deductibles, if you don't have the full coverage, are going to definitely cause an assessment, I would imagine, if they're not ready for it. Okay, so know your risk, 6 Ps, make sure you pick how much coverage you need to get back on your feet. Pictures. And also, what I learned recently, if you have 2 floods close to each other, don't only take pictures of the damage, Take pictures of the walls going back in. Take pictures of all the new stuff that you're buying to do your repairs.
I've got that on my list here.
All right, go, Kim.
So how many of you have ever heard me say, pictures, 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 take pictures, and when you think you've taken enough pictures, take even more pictures, right? So unfortunately, our community has now experienced multiple claims in a very small period of time. And what we have learned, because over the years, we have not had this scenario, we now know that we take even more photos. So let me explain this to you very clearly to a point of where we certainly hope that we're not in this position again, but if we are, I want all our residents to be prepared. You take pictures of your place before the storm. Take it all over. Video. It's okay to do video. Take video. But remember, you're doing it of everything. Your trim, your doors, your appliances, your serial numbers, your carpet, everything. Take detailed video of all these things.
Insulation.
Insulation.
Coming out and going in.
Yes. All right. So then during the storm, well, I've seen lots of videos where the water was pouring through the front door, going out the back door, right? So we know that there was a flood. Then when the water starts to recede, the photos after, and I'm talking the detailed photos again of everything that's wet. Anything that is wet, you want to make sure you get photos of, because this is your documentation now about what's been damaged. When you start tearing things out, take photos, keep samples. We've talked about keeping samples of your trim, keeping samples of your furniture, upholstery, anything along those lines that are damaged. You know, it's not like you're going to keep all that stuff in your house because it's wet, right? And we want that to come out so that you don't start getting mold. Keeping your receipts, keeping your contractor bills, all these things along the way, please keep them. But here's the new one. When you're finished with all your repairs, now take photos of your repairs. This is the new one, because if you flood again, all right, if you flood again, unfortunately in 3 months, right? Now we have to show all of that was repaired and damaged again. So now on our second claim, we need to show that we had all of these items repaired, replaced, purchased, and here's our pictures of how it was, because then unfortunately, if we have to start that process all over again, you already have all that documentation. We would like to think that because the adjuster had all that information, the adjusting firm had all that information, let's not leave it up to them. Let's keep it together ourselves, because what we have found after this last go around with the second and third claims for even some folks, that the hardest part was going back and capturing all that old data that we had on our second or even first claim to be able to prove the second claim was done and then the third one, so forth. So if you think you've heard me say photos, photos, photos in the past, you're going to hear it again. Now we have it 4 times, and all of your records, your invoices, everything, just keep it in a file. Drop it in an envelope, but just keep it. So that's my takeaway from tonight that I want you to go away with, and let's just hope and pray that the sun continues to shine and we don't have any more. We've had our fair share, right? So we're at about 7:10. I really do want to make sure that anyone has an opportunity to ask a question. If you came with something on your mind that you want to ask, please, now is the time to do so. Anybody have anything they want to ask anybody that's up here? Did everybody enjoy the pizza tonight?
Yeah.
Did everybody, we really appreciate your coming. Thank you so much. And we'll, like I said, we'll be staying around here for a few minutes in case anybody has a question. Yes.
There's some talk going around about if you had a house that had repetitive losses within a certain amount of time, that there was some kind of grant or something that we could potentially get
Want me to
for
take that?
Yes, please.
elevation or something
Pass
about
that
that?
down, Lisa, please.
Can you repeat his question?
Yes, the question was regarding, it was kind of twofold. It was repetitive loss properties and it was about grant funding that might be available. So repetitive loss properties would be eligible for application for grant funding, would likely be approved as well. There are two grants right now that we're looking at. One is FMA, which is flood mitigation assistance. The NOFO, Notice of Funding Opportunity, for that one usually comes out in July. And that would be something that the town would have to discuss to see if they want to do the program, because it has to, you have to apply through the town, who would have to apply through the state, who would have to apply through FEMA. So it's not an easy process to navigate at all. So this is going to be a decision that, our policymakers are going to need to make. They're going to need to look at, how much staff time is this going to take? What's the workload? Because it's a very, very intense program. So it's not easy. So that's the flood mitigation assistance. And the repetitive loss properties are a 90 to 10% match, meaning FEMA covers 90% of the project. 10% would be on the homeowner. If it's a severe repetitive loss, then 100% would be covered. But they also have caps, and you have to meet a cost benefit analysis. So let's just say you're going to elevate your house. You're going to jack your house up. It has to meet, they call it BCA. So, and the BCA has to be 1. So whatever the cost to do that job is, has to make sense for FEMA. So if you have somebody that, say, doesn't have insurance and has never made a claim, FEMA has no stake in that game, right? So less likely to get it. But if they have somebody who's been in the program for years, has an NFIP policy, and has had repetitive claims, right? Repetitive flood loss claims. Now they're the ones that cost benefit analysis more likely will work out, and they'll get approved for the grant. There are a lot of things that you need to be careful throughout that process, though, and it's a lot of work to do. So I'll leave it at that. The other grant that we just got notice that's available is called HMGP, Hazard Mitigation HMG
Great
Grant Program. So that one is through the LMS. So the Local Mitigation Strategy is a countywide multi-jurisdictional plan for all hazards. Flood, of course, is a big piece of it. Floods and hurricanes is the biggest chunk of our LMS in Pinellas County. The town participates in it. Like I said, it's multi-jurisdictional. That program for public information that we do is multi-jurisdictional, and it's basically the flood outreach arm of the LMS, because there's an outreach component to the LMS. There is also a project section. So basically, here are the hazards, here are some mitigation strategies we can take to address the hazards. Education outreach is one of those mitigation strategies. That's where the PPI comes in play. Then there's actual projects. Think of like capital projects here. What do you call them? The valves, the one-way valves for the tidal check valves. Sorry, brain fart. Tidal check valves would be an example. I think some of the fire stations got generators. The county a couple of years ago got their mast arms replaced because they had blown down during Irma. So, I mean, it doesn't have to be a flood hazard, but think of these as capital projects that the town could do. Some sort of flood mitigation projects or something like that they could come up with. It could also be acquisition, right? Voluntary acquisition projects to make areas for stormwater retention or detention. So, as houses are going for sale, if they wanted to put in for the grant, then that would cover 75%. So HMGP is a 75%, 25% match would be on the town. So, if they're going to buy a $1 million property, they're going to have to pay $250,000, and then FEMA would cover the $750,000. Just an example of an acquisition project, and then that would be open space for stormwater purposes. Just examples, random examples. So those are the two grants right now, and if you want to elevate your house and you want to investigate that grant opportunity, there's a lot of information on the FEMA website, and I would ask your building department or your commissioners to take a look at it. The county is investigating it right now, so we are looking at how would we, with our departments and how we're set up, work it out so that we could make it happen for the residents of unincorporated Pinellas County. And there's going to be a lot of interaction with legal, because you have to have contracts with your residents. Then the residents are going to have contracts with the contractor, and you have to meet all of the federal procurement requirements because it's a federal grant. So there's a whole lot that goes into it. So the county right now is working on figuring out what does that process look like, And if we figure it out and we think we can do it, then we'll bring it to our leadership, our policymakers, to decide if the county wants to move forward with it. And of course, we'll hand that off to all the towns to use once we figure out what the process might look like. So yes, there are grants. No, they're not easy.
Hey, Lisa, and maybe this group can't answer this, but on the capital improvements and infrastructure and things that the town can do, is there anything in the works for what's been happening with the septic systems and the whole, I don't know the technical term, but I know the holes and we get, yeah, the sewage coming back up when we have the storm. Is there anything in play to kind of minimize that?
Well, for new construction, backflow preventer devices are required in the sewer lines at the connection to help mitigate that, help prohibit that as much as possible. But that doesn't mean that your neighbor is going to have one and his raw sewage wouldn't end up in your yard or your house either. But that's a slow process because it's not mandated and it's not retroactive. It's only for new construction or new installations.
So it's a house by house issue. It's not like a town collective
Well, the whole infrastructure, maybe Mike can answer that question better.
More information on that. I'm Mike, the town administrator, and one project that we have in the works, the project that we have, I gotta figure it out now. Oh, yeah, I'm sorry. So one project that we're gonna be kicking off here soon, as far as scope of work and doing some engineering, is the town sewer system needs some extensive work on lines and laterals. Once that scope of work and engineering is completed, then we'll have a better picture going forward on all the work that needs to be done. But yes, a massive or a large sewer project is in the works.
Great.
But it's the very infancy stages.
Thank you.
All right, anything else? Yes.
I have a question for Mr. Parker. So with the increase in building costs, both material and labor, and increases that everybody's seeing in insurance, are there any plans to increase the $250,000 max payout?
It requires an act of Congress to change substantially the flood insurance program. We only within FEMA have a certain authority to do some things. Most of it requires an act of Congress, but right up now until April 8th, FEMA is accepting information pertaining to a few changes that they're trying to implement. Yes, one of the primary things is to increase the statutory limit that's currently in play. Also, increasing the statutory limit of ICC coverage. Also in play is allowing monthly payments. These are all things that we are trying to do to make improvements to the flood program. Another one is for a premium reduction to be able to have an actual cash value settlement versus a replacement cost value settlement. And I go to that reason that as a claim adjuster, there was wear and tear, and then there was care. Oftentimes, I explain very thoroughly in the report that I'm looking at a very old item that was absolutely flawless and perfect and was of a high quality. And to replace that item that may have cost $1,500 way back when they paid an inordinate amount of money for that item would now be $5,000 to replace that at today's price, minus the depreciation of care. What depreciation do you have care? There has to be some reasonable number that an adjuster places, but I've had depreciation on a specific item because it has to be item by item by item, not lump sum. But I've had some things that had zero depreciation because I photographed it still in the box, and the box was all flood damaged, thereby everything inside it, but it was wholly unused. So the depreciation on that unused item intended to go in and then the flood lapped it was zero. Items that were in perfect shape but very old, or very little use because there's only one person there and a washing machine and a dryer is not being run like it has 8 kids and 4 dogs. So things have a different level of wearing out or lasting nearly forever because they're cared for. So when it comes to the ACV settlement potential, there are changes that are trying to be brought about. And right now, FEMA and the NFIP are open to hearing from the public up until April 8th
I wish I had the FEMA website. And probably the easier way, rather than go to FEMA.gov and going through our search engine, Google, and say, hey, I'd like to make comment to the NFIP on its open public comment until April 8th. I'll bet you something in that parameter would get you flat out where you can make your own public comment and support these changes that we want to make to our program and encourage Congress. Listen to what's going to benefit the people, because the people are speaking out about public comment towards our program.
And private, they can buy additional.
Yeah, and, you know, on, one comment to make on that is there's two other options, is private insurance, which, you know, you want to look at very carefully, but they do allow the full value of your home to be insured. And then there are companies that do what we refer to as excess flood, which is an excess flood insurance policy over the existing. It's just a matter of there's certain parameters as to who they qualify for. But, you know, so if you were worried about, if you didn't have a flood insurance policy and you wanted the full value of the home, you can certainly look at private insurance to do that. But again, when you leave the NFIP policy and you're getting credits for, for the old policies, you lose that. You never will get that back. So it's you need to look at that whenever you're making those decisions.
Yeah, I was referring to the excess. So you have your NFIP policy and then you go private just for the excess. The other thing that's not covered under the NFIP is the loss of use. So if you're out of your house for a month or two while the repairs are happening, the insurance is not going to cover that. But that's one of those excess policies.
Yes,
You can go and you can buy coverage for that if you want to.
Over and above the underlying.
Those are pretty costly, right?
They are.
That is another one, though, that we're looking at wanting to add an a la carte. Do you want to buy loss of use coverage? It's going to be a finite amount, meaning a finite period of time. Can't be left open-ended like, well, you know, I'm just kind of dragging my feet. It took me 19, 20, 30, 40 months to get my home all put together again. I've been living somewhere else and you get stuck with a bill. It's not going to be set up like that if we get that opportunity to get an a la carte coverage where would you like for an extra premium to have that coverage? One of the other ones that really is not a factor here, anywhere nearby here, anywhere where you're going to be selling is we'd like to buy coverage for all the finishes that are in our basement. Well, in my professional opinion, a basement's nothing but an unfinished swimming pool waiting to fill up. If you've lived in other parts of the country, basements, you have sump pumps, you have all kinds of things to prevent that. And they're built with concrete block and concrete floor because they're meant to take a wet space and then be dried out. And they put equipment down there. But and we do protect all the necessaries that are in a basement. And we protect it for cleanup unfinished. When you finish it, that's at your own peril. But one of the considerations to be able to buy a la carte is some level of coverage for basements. If you want to pay that extra price for that very high risk area that highly likely is going to fill up eventually at some point in time based on the water tables.
Yeah, right.
When's the last time the FEMA policy max was increased?
Ooh.
That's my point.
Okay, well, I wish I knew the year, because I was still adjusting that policy when it was for the lower limits, when I think $100,000 was the cap for building. I don't know.
It's been a while.
I forget. It's been a while. 1992 is when I started adjusting flood losses, so I'm allowed to forget.
That's okay. But again, that's kind of my point, right? So.
Yes,
Well, it takes
a while.
Congress, that's
No,
why.
Yeah,
heard that.
okay, and there we go,
So-
not on a political situation,
No.
but they gotta agree.
Right,
before
but
we
you
can
said a
make changes.
material amount. What's a material amount?
What?
You said it has to be an act of Congress if the amount changes in a material amount. What is a material amount?
Oh, did I use that word?
Yeah.
I said that we have authority within certain parameters to
Right.
do things that didn't require an act of Congress. And one of them was setting this pricing that we now call risk rating 2.0, which Congress said back in 2012, 2014. Get your pricing set so that we have an idea of what flood risk is and what it really should cost without subsidies. Because the subsidies have kind of falsely led people to believe that flood must not happen that often if it's that cheap. Back when we used to have the $350 policies in certain areas for $250,000 of coverage and $100,000. I mean, pretty low. But can you imagine how many times some of those structures got flooded and that number got paid? Because we do have repetitive loss and severe repetitive loss.
Thank you.
You're welcome.
All right, anything else? All right, well, thank you all so much for coming, and look forward to seeing you at our work at the hurricane preparedness meeting that we'll be having in May, probably. That's usually when we're having it. Please come out. We always have several different speakers that are here for that, including Bay News 9. They always don't notice you're right. Yeah, so. Thank you.
Thank you, guys.